I guess the way Capital First as a company, as a stock, and the way they've created wealth for minority shareholders, I think is extraordinary. The stock may be down today, but that is no indication of what the company and what the stock has managed to achieve in last couple of years. So the management now joins us, and to take things forward, we are now joined, we will also be joined by the management of Mahindra & Mahindra Finance, and we will also be joined with the management of Bharat Financials. So it's an NBFC special today, and thank you for joining us and walking the narrative of the conversation. I want to really focus on why NBFCs are growing at a time when banks are flushed with liquidity.
Okay, good question. But because you're the first channel I'm speaking to after the results, let me just put some numbers out of the way because shareholders are keen to know. Our NII for the quarter actually has grown from 277 crores to 415 crores. And the income, that is NII plus fees, has grown from 345 crores to 514 crores, a growth of 169 crores. Now, after provisions and all that, the profit has grown from 49 crores to 67 crores, a growth of 36%. So, with this basic data out of the way, to your question about what's really happening, basically, I think the whole ecosystem is now moving towards financing the small entrepreneurs, financing consumers. You see the talk of by most public sector banks, private sector banks, NBFCs. So that's where the action is. And that, at that space, the market is growing really very well. For example, you may say that housing is stalled, but affordable housing is flying. And that's basically Indian economy at the grassroots is really doing very, very well.
Are you growing because you're taking more risk?
No, I think because the market is growing.
But you are also managing to, you've also managed to gain at the cost of PSU banks and also, private banks. Because I'm getting a sense when I speak to PSU banker or private banker is that they don't want to take a risk. Is that true?
That's not quite true. Actually, if you think about the composition of growth of even PSU banks, if you see PSU banks as a whole is growing only 2%. But what is stalling? It is stalling the corporate borrowings, people borrowing thousands of crores. But the home loan portfolio of all public sector banks are growing. So basically, I don't think anybody is taking anybody's share. What's happening, the pie at the grassroots is actually growing. And that's where the real action is. For example, you see our numbers. Let me just split it up for you.
Yes, please.
Our book is, say, now 21,000 crores. It's grown 25% over the last year. But the big growth has come in the small enterprises, has come in consumption. The wholesale book's actually shrunk by 35%, and the retail book has now grown 35% to reach 20,000 crores. Yeah. So you can clearly see where the growth is coming from.
Would you have a feel of the numbers in terms of out of the retail book, how much is coming in from affordable housing? Because up until now, affordable housing is a fantastical idea that we all know of. I don't know how much is the on-ground implementation.
Okay, it's not just a fantastical idea. It is real. For example, our housing book has grown 100% over the last year. Wholesale book has come down 35%. The loan against property, which is the traditional book, has actually is growing only at 10%, but housing is growing 100%. Consumption is growing 30%. So blend grows at 25%. So clearly housing is a real theme. You see almost all banks, everybody grows housing these days.
So if I look at your numbers, your housing vertical has registered a growth of 45%. If the same run rate continues, which means your housing book will actually double in less than 2 years?
No, actually the core affordable housing actually grew even faster.
Okay.
I said it grew 100%.
But we're looking at the aggregate number.
Aggregate number.
Yeah.
So yes, certainly we think that, as any business, something comes down, something goes up. But blend, we feel to grow 25% is very comfortable. If you see our own growth composition, book has grown 25%, but profit has grown 36%. So how is that happening? Yeah. That is happening because of operating leverage and economies.
The other impressive thing is that your asset quality at 90 DPD has remained very stable on a sequential basis as well. What's the outlook going forward? Because you appear to have slightly bounced from any sort of demonetization impact. You sort of escaped it.
Actually, I feel that the Indian economy stress tests you every once in a while, and that's how the Indian economy is, right? There was a global economic crisis, then there was a policy paralysis for some time, then there was a rupee crisis in 2013, rupee went to 68, then there was demonetization, now there is GST. It happens all the time. Basically, nothing to be worried. Life is quite fine. We've all bumped along. Our NPA numbers, just to put the record for your listeners, last year, same time, our gross NPA at 90 DPD was 1.72%. 1 year has gone by, it is still 1.72%. Our net NPA 1 year ago was 1.19%. It is now 1.04%. So it's all stable, nothing to worry.
The raw material for any NBFC is always cash. And it is also, cash is a function of interest rate cycle. Now let's be real, interest rates in the system are not going to go down in a hurry. Could that have an impact on your spreads going forward? Because last 2 or 3 years, all NBFCs have enjoyed what could be called as a vertical drop in interest rate cycle.
It's a very good question actually. But what's happening is that there are a dual rate structure happening in the country today, because banks have fixed a base rate at maybe about 8.45% and they can't lend below that because that's the base rate. Now the real rates are below that. They're close to like 8.1, 8.2%, which is the mutual fund market in the form of NCDs. So what's happening is that companies and well-rated companies, and we are AAA rated, we tend to migrate towards the bond market and don't borrow from banks. So that's a way of reducing cost of funds, and that story will continue for a while.
The reason why you're growing is because the market is growing, but for the market to grow, economy has to grow. But if I look at key data points, urban consumption, job creation, there is a issue there. So are you getting a sense that now there would be a challenge with the market where you're focusing on?
I think you're looking at the wrong data.
Okay.
You saw the data of Maruti. Just came 2 days ago. 17% up.
We are critics. So.
Yeah, no problem. 17% up. People selling 5 lakh to 10 lakh rupee products, it's up 17%. Two-wheeler sales are up 15, 16%. So if you see, that is actually, Indian consumption is actually absolutely fine. What stalls are, sometimes clouds our opinions, what's happening in the corporate sector. We see, investments are not happening, big ticket, but that's a very generic story. I think it's an old story.
So what are the data points which we should look at to understand your growth? I mean, what would be that harbinger? Should it be Maruti sales? Should it be the GDP number? It cannot be the IP number.
Okay, that's a very good question. See, actually, if you see the two-wheeler sales, if you see durable sales, if you see Maruti sales, if you see these data points actually present what's happening on the ground. Are people buying a 20,000 rupee product? And if that's growing at 15%, that's something very, very positive. Even in employment, I often feel that we are just getting clouded by this story about jobless growth and all that. Fact is that jobs are getting created at the micro level, which is, they don't even pay provident funds. They're not part of any accounting system.
Okay, just very quickly then, do you have any capital raising requirements?
No plans.
Okay, now if I take the clock back in last 12 months, we had demonetization, we had impact of GST rollout, and you managed to grow. So you managed to grow at a very smart run rate when there was an abnormal year. Lot of unpredictability, lot of chaos in the system. This year is expected to be normal, and the monsoon effect is going to ensure that the feel-good factor will make a comeback. So what happens in a normal year? In a bad year, if you're growing, what will happen in a normal year?
Let me say in a bad year, we've grown, say, 25%.
Exactly.
First of all, it was not a bad year. It was just an odd, sporadic, comets that came at you, I think. But other than that, things chugged along. I think, even this year, we feel very comfortable projecting a 25% growth. We think the profitability growth should beat the growth of 25%, and I think that's maybe 30 or 35%.
Just to get some numbers right, what is your current AUM right now?
21,000 crores.
Okay.
21,000.
When do you think it will reach 50,000?
You see, if you compound something at 25%, I think in 3 years you should double.
Rule of 72 makes it 2.8 actually before 3 years.
Yeah, I mean, you should.
So before 3 years.
I think so, maybe 3 to 3.5 years.
And look at it, Maruti and Hero, what a
Exactly.
seems like it's going to happen.
You can pull out this interview and check it out.
Okay, great speaking with you, and good luck and congratulations once again. That's the word coming in from Vaidya from Capital First. Let's just check in on what the stock as well is up to right now. It's recovered quite a bit.